What's up, guys? Got a real good one today for you guys. Hey, what's up, Joel? Thanks for joining. So, we got Mario Camino coming on very soon, CEO of Arkad Capital, one of the most experienced and outstanding lenders for real estate investing. And he'll be on here very soon. Hey, what's up? What's up? What's up? Here we go. What's up? How's it going, man? Thanks for reaching out. Thanks for joining. Thanks for joining. You can put in your request, and then I can add you in. Should see a request to go live with me. And then once you do that, I can add you in. Hey, thank you, man. Thank you. Yeah, likewise, bro. You're doing your thing too, man. Thank you for reaching out. What's up, Mo? Thanks for joining. Mario, are you able to join us? Sabi Mello, all right. Kind of getting the gang, seeing the regulars. The regulars are coming out. That's good. That's good stuff. Appreciate you guys supporting. Always going to try to give you guys great value and get good people on here, Not trying to waste nobody's time. What's up, Joel? Let's see here. So as I was saying, got Mario Camino, CEO of Arkad Capital, based in Jersey. He's joining us, so hopefully he'll get on here soon, and we can talk a little bit about the lending landscape right now. Through as we deal with this pandemic, so forth. Yeah, hey man, thank you, Mo. I appreciate that. Yeah, we tried, man. We got some good ones coming this week. This one tonight, hopefully, will be really good. And I'm already working on others for following weeks. What's up, Kiki? Thanks for joining. So yeah, this one tonight though is all about. We're speaking with a hard money private lender. They have their own funds. They work with a lot of investors, new experienced investors. Especially in Jersey. They're based in Jersey. Quintanilla, what's up? Thanks for joining. Just appreciate your patience here. I'm just waiting to see what's going on. If Arkad can, or through Mario, through his own account, he can jump in here and join us. And because I really, y'all don't need to be hearing from me. Mario's the expert, so he has a lot to share. I'm just trying to learn myself too. So you should, okay, here we go. Cool. All right. So let's just let this connection work and get him on here. What's up?
Hey, man. How are you?
How's it going? All right. Oh,
Hey,
hey, sorry about that. I don't know what happened, but
I hope
glad we were
it's
able to get you on.
yeah,
Yeah,
better.
how's it going, Mary? I appreciate your time, man.
Likewise,
I
definitely. Thanks
appreciate
for
you.
having
I know you guys are busy, so we'll get right to it, guys. Again, my name is Fabian Baez. For those that don't know, starting real estate investor, a little going around the block, getting some work in, putting in a lot of time, and trying to connect with people that know a lot more than me and can bring value and can also bring you guys value. So Mario Camino is the CEO of Arkad Capital, but also the Arkad Group. And but specifically, we'll be talking today about their capital company. Mario has basically like you've been in this game for like a decade and a half, right?
me.
Rehabbing,
Yeah,
buying whole development.
going on to about 15 years. Yeah,
Yeah. So
as Arkad. Yeah.
right, and so they've done all kinds of things. You guys are based in Plainfield, New Jersey.
We are. Yeah,
Right. Right.
we own a little chunk of downtown Plainfield, man. So one of those buildings we kept for all operations. So we actually run all
Awesome.
the companies out of there.
Awesome.
Arkad Group, the management, the development side of things, and now the lending side of things.
That's the Arcade HQ. Yeah.
Yeah, yeah. Look, there's I always make a point, and let me just get started with this. Look, to a lot of us, as we travel through this real estate, story of ours, we hit milestones, right? We reach new levels, we try new strategies.
Yeah.
To me, coming up, as a real estate investor, to me, owning my own building, my own location, my own place of operation was important, was very important to feel like a real estate investor. Frankly, it's like a car dealer who doesn't own his own car.
Yeah.
It really so since the beginning of the company, we always Dan and I, when I say we, Dan Rivera, my partner, we always made a point to have that as a goal and a milestone for us, where we knew that when we got to own our own commercial building and operate out of it, we as real estate investors would have reached a new level. And that's exactly what we did. That's exactly what happened. We flipped houses for at that point about 8 years. Did very well. We very similar to what's going on now, man. We've always improvised. We've always been able to land on our feet, for lack of a better term, and really strive through those years, and build what Arkad is now.
Right.
And we got to a point where we knew that commercial real estate, commercial ownership was the next level to this, right?
Right.
We didn't just want to, but there was a caveat to it, not a caveat, there was a catch. We didn't necessarily want to just own buildings sporadically, like per se, a couple buildings in Newark, a couple buildings in Irvington. I wanted it to be different. I wanted it to mean more than just owning buildings and
Yeah.
having tenants. I wanted to have an impact in a city, in any given location. At that particular point, I didn't know what location. I just knew that I didn't just want to own. I wanted to improve. I didn't want to just get wealthy knowing that I have these commercial pieces, but
Yeah.
rather being able to collectively, along with my team, my tenants, my partner, take a little chunk of any given city and really improve upon it to a
Right.
point where it has not only relevance, but it has a positive
Right.
outcome to the overall neighborhood and
Right.
therefore the overall town.
Right.
So we tried and we started. At that point, we were based in New Brunswick,
Hmm.
downtown New Brunswick. I went to Rutgers, so I
Okay.
just never left Rutgers. I kind of just opened up my shop downtown. And
What'd you study? What'd you study at Rutgers? If you don't mind me asking.
that real estate. Um, well, they didn't have it. Now you can get a master's in real
No.
estate.
Yeah.
Back then, it wasn't. No. So I'm a pre-law. Law school was the big plan. So I'm a political science and criminal justice double major, and I have a finance minor. The finance, of course, came in
Sure.
handy, and
Sure.
um, but yeah. So that's what I did. I mean, look, I love school, and frankly, real estate to me comes during school because I'm broke. I'm a broke college student, like everybody else around me, and I don't I always call it. I say I was broke with standards,
Yeah.
because I didn't want to fall for the carousel of waiting tables every weekend and
Yeah.
doing double shifts and doing all those things like I wanted more. I thought I was very talented. I thought my mind could take me to a better place than just my body and
Sure.
how many tables I can serve and clean and so on. So, I was, it was strange, man. I mean, look, it really
No,
started
listen.
with, with very basic,
Right.
um, the very basic notion of wanting to do something greater.
Right.
In no time, real estate came itching away, and yeah, I became that kid that rather than watching football on Sundays, I was reading newspaper articles on foreclosures. I was grabbing real estate magazines. I was I mean, heck,
Educating. You're educating yourself. Yep. Yep.
yeah, and that evolved into what my first purchase was, which was in New Brunswick, and in my first profit, and
A
that
flip.
was a milestone. Yeah, I mean that changed my life, and I say this a lot. I mean, there's many things in my life that I could tell you that have changed me, have helped me evolve into something else, but that one transaction changed everything around me at its my real core, because everything that I thought I knew, everything
Hmm.
that I was brought up to think, everything that I was raised to believe,
Right.
all of a sudden came into question so deeply, because no, it turns out that I don't have to, heck, I don't even have to go to college
Right.
to make 30, 40, 50,000 a year.
Right.
And for that matter, why make 30, 40, 50,000 a year when I can do at that point, two of these houses and I'm making $100,000 a year. So,
Right.
it really took me away from the I wanna go through the struggle mentality, and
Yeah.
it kind of put me into, I want to create my own hustle, my own struggle,
Right.
and I don't want to be subject to the 9 to 5. I mean, look, 90% of my college buddies, they opted to get a job in the city, and they leave at 5 in the morning and they get there by 7, and they trade or advise or some attorneys, and by 5 o'clock they're supposed to be off the clock, but they're really not. They're
Right.
back at 8, 9 at night, and
Right.
the biggest complaint is I never get to see my kids. So
Yeah.
to me, all that was just very troublesome. Like
Hmm.
I just didn't. I wasn't. I didn't like the idea. Just like I didn't like the idea of spending my time waiting tables. I didn't like the idea of creating a career that would actually consume time away from those I love.
Right.
Instead, the opposite. I wanted a career that gives me the flexibility to just always be there,
Yeah.
always be available. So the complete opposite. Um, and so I went for it, man.
Yeah.
I finished college, of course. It was pretty much part of my own goals. That I had
Hmm.
said I wasn't gonna leave, but my path changed. My by the time I was done with college, within a couple of months, I started Arkad. My first flip came while in college.
Wow.
By the time I graduated college, I had already done three, and I'm only 19 on my first one. I'm 20 on my second. I'm 21 on my third, and by the time I leave college, I mean it's I'm not struggling like most.
Yeah.
And more than anything, I'm kind of going against the grain, right?
Absolutely.
I'm,
Sure.
I'm writing my own story. I'm setting my own terms,
Right.
and although humble, my first office, what I mentioned in downtown New Brunswick, was a literal just tiny box.
No,
Um,
but you got started. That's it. Yeah.
yeah, Dan sat on one corner, I sat on the other, and we kind of just
Shout
we
out to Dan
started doing
Rivera, great
bones.
guy. Yeah, your whole team is great. Yeah.
Yeah, man, thank you,
Yeah.
just good people. That's what it's all about. I
That's it.
frankly, look, I say this over and over and over, but I wouldn't be where I am without the people that I surround
Right.
myself with.
Right.
It's every single person within the Arkad family. They're all special in their own reason. They all have. I mean, I joke around. I call them superpowers. I use it with barbers as well. I usually ask. I'm like, hey, what's your superpower? But my team has superpowers. Each and every one of them. It's like
No.
the League of
Right.
Justice. Yeah, they
Yeah.
all have their own unique ability to name it. I mean, we do, we do acquisitions, we do
Right.
rehab, we build luxury homes, we own and build apartment buildings.
That's
So
great.
there's in land. So there's multiple departments within Arkad,
Right.
and every single person is sort of responsible for those departments,
Right.
and everything that happens within it. So it's been an incredible story, man. I mean,
No.
we were a team of two. That's now a team of. I
Yeah.
mean, we're 10 in the office, and about 15 out in the field doing the actual
Right.
construction.
Okay.
So it's evolved
So
into
no,
something.
you've built companies, and that's great. So just to fast forward a little bit, in 2018, you guys launched your lending company, Arkad Capital.
Correct.
And then, if you could talk a little bit about why you decided to go on that path,
Yeah.
and then
Sure.
it could lead us into obviously the main focus of the talk here and the state of lending at this time.
Yeah, sure. So, um, look, years and years of investing, of flipping, of building, and creating my relationships around with uh, pretty much every single lender, those that are still in the business, and some of those that are no longer in the business. And good people, all across, and I always felt as a borrower though that something was missing, right? And then there were a couple of things. There was a lot of inconsistency in the business. There was a lot of uh, flexibility from a lender to pretty much quote whatever they felt like quoted at any given point for whatever reason. So in many ways, that structure is still missing
Mm,
from that industry. It's one of the things that I've sort of committed myself to bring. It's some type of order,
okay.
some type of rule book to this. But point is, there was always things that were missing, and there was always things that we didn't necessarily like. Like, I'll give you an example.
Okay.
Back then, many lenders used to, as almost like a standard practice of business, they would charge full boat. It's what it's called. Full boat is charging a borrower interest on the entire loan amount, as opposed to charging the borrower interest on just the money that he's drawn out.
Mm,
When you purchase a property, let's say you have you bought it for what you bought it, but you have $100,000 renovation budget,
right.
and you're not going to tap into those $100,000 right away.
Right.
Instead, you're going to do it in portions, and that could take you 3 months, right?
Yeah.
What they used to do before is they would charge you interest on that entire amount as if you had already taken it out.
Mm,
And I always had an issue with it. I had a big problem. I just didn't understand it. I didn't like it.
yeah.
Um, and I mean, I can go on the things that I didn't like, but it's kind of like what really sparks the fuel, so to speak, to think of creating something that benefits us. So something created by house flippers, by developers, by investors, to serve house flippers, developers, and investors. And within the parameters of that new structure, eliminating some of the nuisances and
Sure.
some of the just wrong terms
Right.
that were just
Because
constantly
you
being
you guys you guys are in the field doing, so you kind
correct.
of know what investors need.
Right. So, and it becomes very evident. Not to play down the other companies out there, but look, we do this. Not only that we've done it in the past successfully, but we still do this. I mean,
Right.
last year we did 38 houses with an average rehab of, I believe, $42,000. So they're not, we're actively doing this. So
Right.
we're not putting out just products that you know in many ways are like everything else out there, sort of tailored to focus on protecting the lender, and
Yeah.
the borrower sort of comes like the added piece to it.
Yeah.
Instead, we create products that sort of bring everyone together, and um, without too many details, it always puts me as the lender in not as a great position as every other Harmony lender, right? Like, we push the envelope a little bit. We believe in deals that fall slightly outside of the parameters that every other lender would have. mostly because we look at deals for what they truly are, not just a piece of paper and an appraisal and a bunch of pictures,
Right.
but what we believe the potential could or cannot be. Realistically,
Right.
what this could or couldn't actually be,
Right.
based on our own experience, and that adds an extra layer of
Yeah.
safety, I believe,
Yeah.
to us and to my team. So the extra risk that we take on some of these transactions is really based on our own knowledge and comfort
Right.
level, on how to potentially fix a bad
Mhm.
situation.
Yeah.
And I know it sounds very technical, but what it boils down to, man, is there are people out there that have incredible talent to do this. They have the capital to do this. They have the willingness to do this. They just don't have a reliable source of lending, of income that they can tap into consistently, because they just haven't reached a certain level yet, or
Yeah.
like what just happened, terms just changed.
Right.
So that's kind of where we come in, where especially at this particular point, because what we're seeing right now is a whole new arena of borrowers, right? So to give you a bird's eye view of this, um, in the past 2 to 3 months, collectively, only about somewhere around 40%, maybe let's say about 50% of all active borrowers, within our tri-state area, can now qualify for a, let's say, bridge, a fix and flip loan, whereas 3 months ago, the other 50% could also qualify. And this is strictly based on credit. Look, if you don't have a 650 FICO right now, you're not in a good place. I mean,
Yeah.
not just outside of real estate, but
Right.
within borrowing money for a loan, for a rental product, a rental property. 650 has become the new 620. 620 was our bare bone standard. If you,
Right.
that being said, though, even if you were a little lower than 650, well, I'm sorry, 620, we'll still try to make the deal work.
Yeah.
Whereas right now, those standards have changed a little bit. So, that being said, we do look at, like, if your credit is within that realm, we do validate your deal by, again, going and doing what I said, by looking at the deal itself.
Yeah.
By looking at your experience, your
Yep.
ability to do this, looking at the deal, and really trying to, this is really when people become people, right? And ultimately, look, I can tell you everything in the world smells good, looks good. I walk the property. This is good for a joint venture. This is good for a loan. This is good
Right.
for whatever we're proposing. But ultimately, and this goes all the way back to the beginning of the company, and even Arkad. The human touch is very important for all this.
Mhm.
So although we have boxes, let's call them that, we really focus on the long-term relationship with the borrower.
Right.
The idea is, you may not perhaps be as as shiny as you need to be at the moment, but at one point, if you stick to this, within the next few deals, you're gonna be gold. You're
Right.
gonna be golden, and we want to know that we were the bridge,
Right.
that helped you get to that
Right.
point, simply because we believed in you a little bit more than the other guy that looked at your credit and the background
Right.
and all that
And
stuff.
and I can say this, that over the last couple of weeks, being in contact with Mario and his team, we went through some of this because remember we had a deal that we brought you, and you guys, I appreciate you guys because you helped me really examine it and have that experience to take it apart and see, oh, wait a minute, I didn't realize, Mario showed me certain things about it, certain aspects about it where maybe I wasn't going to be able to get the maximum value. And I decided, not that Mario talked me into it, but I decided once I got that information, let me step away from it because it's not that serious. It's you always want to go after good deals and not chase anything. And I thank you for that, Mario. And also what I have to say too is during that time, you, Dan, your team, you guys have been really helpful. You've been very personable. And that makes a difference because not everyone's that way. You know what I
Yeah.
mean? So, and like you were just saying about that personal, that human touch, right? That personal touch, because now you create that relationship And now, whether we do a deal or not, but we're cool. I appreciate you guys. I know that you guys are in my corner, and that means a lot
Yeah.
because, like you said, you want to. So much of this is finding good people. Obviously, you got to know your stuff. You got to know what you're doing. But also, it's vital to know good people that you can reach out to. Hey, Mario, I got this deal. Could you take a look at it? Tell me what you think. You know what I
Yeah.
mean? Hey, listen, Fabian, listen, this and this. Be careful because your experience, right? You could see further down because you've seen it all. You know what I mean? So you can help us avoid pitfalls, and I appreciate that. So that's important.
Yeah, your deal was, I'm sorry, your deal was one of those incredible, valuable lessons to be had. And I can tell you, I mean, some investors could go within that model, the bungalow slash cave model, potential expansion, potential dormer model. I can tell you, I have seen that mistake being made over and over and over. I've seen experienced investors um, sort of dabble into it in not necessarily see it for what it is. So everyone's clear. What we're talking about is when you're buying a single family bungalow is the actual name. It's for those who don't know what a bungalow is, it's those little houses that are one level ranches, but they're tiny. They don't really have an attic. They just have a little crawl space up there, and they're usually rectangular and long and whatnot. A lot of them in Linden, a lot of them all over New Jersey. So with those houses, they have a lot of potential. If you find one of those houses in a conforming larger lot, you can potentially just literally double up the size of the house and go up. And all of a sudden, you turn a little bungalow into a two-story colonial. Heck, depending on where you are in the FAR, you can go all the way up to a third story and have an attic in there. So you can really, really push equity out on those. And now that's the sort of the complex, highly profitable way to turn one of these around. They're good in good markets, but they take long, and you got to make sure that your financing is sustainable for 12 to 16 months on a deal like that. The smaller version of it was what Fabian was trying was in essence do some type of he was going to remodel it. But the comps that he was being given were the ones from a blown up bungalow. So a bungalow that's or a bunch of bungalows that people took, and they didn't necessarily go up all the way, but it opened up within the edges of the roof. And added windows and added space, and that usually gives that attic makes that attic livable.
Right.
And it pushes the value of the property pretty high up,
Right.
takes to literally the next bracket. So it's a good strategy. The problem is that the comps that Fabian was given were showing that type of work, whereas the purchase price and the budget that he had on the deal didn't reflect the correct structure. Certainly.
Oh, we got let's see here. Guys, thanks for watching so far. Hopefully you're getting good value out of it. Let's just see here. Oh, let's see. Froze here a little bit. All right. KP, we're gonna get to your questions. Appreciate you guys hanging in there. We lost Mario for a moment, but he should be back in soon. We're gonna make some time for questions, so I appreciate you guys hanging in. Man, let's see here. What's up, Americano? Thanks for joining. Be back on fire. Okay. So, guys, so far we talked a little bit about the start of Arkad and analyzing a deal. Hey, thanks so much, KO. Appreciate you chiming in. I'm glad you're enjoying it. I mean, you know, basically to the point that he was talking about, you know, it's so important to um, you have a deal that you're looking at, have experienced eyes take a look at it. Very important. I'm Neddy's. What's up?
Yeah,
Hey, all
man.
right.
My bad.
It's all right.
I was charging my phone while talking to you, and that plus the info, I guess
I'm telling
it
you, it was like it was too much for it.
well, glad to be back, man.
Yeah. So you were talking about the deal and the numbers
Right.
making sense and the work that had to be done. And
Correct.
I'm glad that I brought it to you and you were able to kind of and see that's the thing is that you're not just a lender, you're also an investor. You've done a ton of flips. So you've seen every house, every scenario, and you saw something I didn't know. You pointed it out and I appreciate that because you prevented me, you helped me make the decision to leave that one alone and potentially, you know, prevent a problem, right? Because we don't want to get stuck with a property and then we can't sell it for the price that we want.
Yeah, my partner Adam, who's probably watching this, he has this phrase and he uses it all the time. I mean, I've never heard anyone say it as much as him, and he always says the best deal that you'll ever do is that one that you didn't do.
Right.
You know, and he I you know I've a lot of wounds I you know I've licked in the past, and he's absolutely right. There are some deals that I wish I'd rather have not done. That and yeah, man. I mean, I wish I would have had someone who just stepped in for 2 seconds
Mm-hmm.
and said, "Hey, man, did you think of that?" and
Right.
they would have made all the difference in the world for me. All
Right.
the difference in the world. So I'm glad, man. I'm glad. I'm glad you brought it up. I'm glad you put it forward. Look, one of the biggest mistakes people have is their inability to communicate something properly, right? And when it comes to this, you throw a little bit of ego, you throw a little bit of um, who knows, just shyness, whatever the case may be. But people stay quiet. They believe what they believe, and
Right.
they don't really reach out for that extra, you know, bit of assurance and
Right.
knowledge. And time goes on, right? And you know, you live with your choices and should be
Yeah.
perfectly fine with that. But what if, right? What if you have the ability to have someone who you can reach out, who not
Right.
only is
Right.
lending you,
Yeah.
you know, lending you money to do your deal, but has also a whole lot of resource and a whole lot of knowledge on how you not you know, for you not to mess the deal up or
Right.
mess yourself up along the way.
Right.
So you know, to us, this whole lending thing, although I told you in the beginning, it we saw an opportunity in the market just because there was a gap in the market, no customer service, very terrible client retention, no real marketing, horrible terms, no real order. So not only that it's that in the beginning, I, you know, that was sort of the purpose, was just create something that just brings it all together. But as we went along with this, we realized the type of impact that we have on people,
Yeah.
and it's pretty incredible. I mean, there are so many instances that I can tell you where a borrower comes in with to us a basic question, to us a just normal, you should ask,
Mm-hmm.
actually you should absolutely know type of question. And when we give it, you know, the relief that comes out is pretty incredible. I mean, and there's instances where before they came to us, like they went to a contractor, they went to their previous lender, you know, or their current lender. Heck, it was sometimes it's because of that they go, hold on, let me try these guys. Like,
Yeah.
this lender doesn't really know exactly what the hell he's talking
Right.
about, you know.
Right.
So we started getting a lot, and
Uh-oh.
started to see so much of that.
Mm-hmm. So
Um,
now there was a question, and I guess this can lead into, you know, how investors can get a loan right now. But KP Investments, how much do you have to put down on an investment rental property? And he says there's a 10%. If you could start talking maybe a little bit, share a little bit about what you're seeing right now and what products are available and what
yeah,
numbers, right, are we talking about here when you're
yeah.
trying
So
to take a deal
um,
down?
Yeah, so right now, look, there is fix and flip product available. It's a little more expensive than it was, but there is money available. And given the circumstances, the only real change that you're gonna face, or a borrower is gonna face, is in some instances put in a little more money down, and a qualified borrower, that is, put in some more money down, or perhaps get in a little bit of a higher rate. But that's for fix and flip money. So that's the 12-month bridge money with construction in it. It's still very much alive, and we're doing a whole lot of it again.
Yeah.
The second product, the one that, frankly, my phone's been blowing up all day on it, all week for that matter. And rest assured, we should have it up and running within the next, I want to say, next 2 weeks at this point. It's the rental product. Now, the rental product is the 30-year fixed, um, 30-year amortization, fixed rental loan. Rates were starting, like, I believe the lowest one we did was 4.99, 4.99%. The highest one we did was like 6.5%.
Yeah.
So the rates were highly competitive. The problem that we all had, and it took us a while to put it all together and sort of structure the sales pipeline, where from origination we eventually have a place in the secondary markets where we're going to go sell these loans to, which is pretty much the case with all rental loans. The rental market is really dominated by two sides. It used to be banks and credit unions, but then Wall Street started bundling these loans and securitizing them and
Was
reselling
it
them
mortgage-backed securities?
to bond traders. Correct.
Right.
And ultimately, what that did is it systemized the business in a way where plenty of capital is available for the purchasing of those loans. The problem that we had was it was COVID-19. It was the pandemic. When this happened, in essence, those big dollars behind those huge bundles of loans found themselves in a place where the government itself is telling borrowers that they don't have to pay rent, that they
Right.
could potentially use their deposits as their next month's rent.
Yeah.
That furthermore, the courts get shut down, so evictions can't happen.
Right.
So it creates a massive trickle effect on how those bundles. Sorry. There you
Right. Oh,
go.
yeah.
How those bundles are perceived.
Right.
And when that happened, it just sent shockwaves through the market,
Right.
um, where that product literally was alive on a Thursday and it was gone by a Monday. I mean, gone. We
Right.
had over 40 loans in the pipeline that
Right.
we was like, oh my God, we need to wait.
Because who wants to invest in that? Wait a minute, you're telling people they don't have to pay their rent. I don't want to invest in that. You know what I mean?
Correct. It created a very environment filled with liability for all these people. So it priced itself out of the market immediately. What's happening right now is confidence is coming back to the markets. Little by little, the stock market, as you guys know, have been doing very well. Although unemployment is high, the belief is, as long as the courts and evictions in the legal system sort of restarts and things start to move again, the liability of not being able to evict a non-paying tenant is taken out of the picture, and that sort of brings everything back to his former. Now, I believe it's going to come back a little more expensive than it was.
Mm-hmm.
The pricing on these bonds is still it's still higher than it used to be, and the rates that we will propose are based on that pricing. So
Okay.
I don't think we're going to see the fives and the sixes right away. I think it's probably going to be 6 to 7.5% rates.
Okay.
And hopefully, it sort of prices itself back down, but it's not going to be a right away thing.
Yeah.
Product will be back out within the next couple of weeks, but then it'll take a couple of months for it to sort of stabilize itself and regain confidence. That's the rental product. So it's not a note. Now,
Yeah.
one thing that I want to put out, and I was having a conversation with a borrower today on this, is look, the way we did it before Wall Street got involved in the rental product business, the way we did it was strictly through credit unions. And what we would do, and we still do, is we bundle. We aim for $1 million, so we would bundle usually either 5 to 6 to 7 multifamilies usually, into one mortgage, and then we would go to a credit union and ask us to. So we would borrow hard money, or in private and hard, for all 5 or 7. And then once they were completed and rented, we would go to a credit union and just do a refinance for the whole thing. We'll pay investors back, and we'll get to keep the houses. We would do this literally twice a year, every year for about 4 years.
Okay.
So we were able to build up a very juicy residential portfolio, smalls, and I'm talking 2 to 4 units.
That's awesome. That's great. Yeah.
Yeah, and those went up in value a lot from what we got them. Some doubled. I mean, it's unbelievable.
Yeah.
So there is a method to the madness, and there's obviously a reward at the end of the tunnel. But there is another way to do this. Now, the problem with going through credit unions and banks, regional banks, is just the red tape, right? It's the amount of time it takes. It's the terms are generally biggest difference in our big hooray with our lending product was that we turn it into an amortized 30-year loan.
Right.
By doing that, we're adding an extra 5 years to the back end of the loan, which allows your cash flows to be higher every single month.
Okay.
Whereas banks don't want a 30-year, they usually want a 25-year, and they don't want a 30-year fix, they want a 10-year fix. Banks are in the business of making money on interest rates. After 10 years, they want to be able to raise that rate.
Right.
So that's sort of been the standard in the rental product, not commercial property, just strictly residential rental products, for years. I mean, for years and years. And then comes Wall Street, and Wall Street has this incredible, simple to qualify, super streamlined type of product that comes with caveats, right? And this is one of them. When the markets get scared, that product runs. Now, that being said, it is Wall Street, and there's literally entirely too much money available, so it has to be placed somewhere. And ultimately, rentals, although this pandemic was something that they didn't account for, historically rentals are a very good bet. So I don't think it's going to go away. I think Wall Street has gotten a taste for this, and it's not going to go away. It's just going to come back in a different form.
Right.
So what I would recommend, though, to borrowers out there is really really think of being able to get financing as almost like a basic real estate tool you need to have as you go through this, not just an opportunity type thing, kind of like when you buy a house, right? Like when people buy a house, they're like, oh honey, is my credit good? Like, is your income okay? Can we talk to a loan officer? Let's make sure that it works, kind of thing. But then they kind of forget about it, right? Like then it just, honey, you can now go buy the trampoline and fill the Amex fully, and that's one of the main things, one of the main differences with us. You always have to be on your toes. Credit wise, income wise, you have to, not just liquid. I mean, I hear liquidity a lot. Like liquidity is important, but being able to get true real financing, flexible and quick and available, you need to have some of your basic components in place. And credit sucks, but it's incredibly important right now, more than it ever was on this. Something like, I mean, we don't necessarily we don't check your income, but we are going to look at your credit, and we are going to see what type of spending habits you have. And if all of your credit cards are maxed out, right, even if your credit is reflecting a positive number, you're not going to be seen by a lender as somebody who we should give $100 and $200 $250,000 to go gamble on a house. So all these pieces are extremely important. And every borrower out there has to sort of like take them in and put them all in place for when a product that they need is out there, not the other way around. So like, I guess my point is, look, if the Wall Street rental product that's coming back, it's too expensive perhaps, or it doesn't come back as sweet as it was. If you're a real estate investor, you should also be able to get bank financing. Like a hard money lender, we're a good option for you. We're a great option to from take you, from point A to point B. But there's still point C, and you don't necessarily always have to go through a hard money lender. At the very least, on the rental product, the bridge product, the fix and flip is different. Banks don't offer it, but the other product, the rental product,
Yeah.
is very much a bank product. It always was,
Yeah.
and it's still there. And if your your hard money lender cannot finance you or it's too expensive, as a real estate investor, you should put yourself in a position where you have options, and you can just pick up the phone and call one of your banks, and it's going to be a little longer, and it's probably the terms are going to be a little crappier, but you have the ability to get bank financing.
With
Yeah.
Yeah, thanks for that great info, Mary. I just wanted to make sure because I know you got to run soon, but I just wanted to see regarding we have a couple questions that came in regarding when that rental product comes out. Do you foresee more or less how much they're going to want down?
Yeah. So I don't the most leverage we were doing before was an 85. So in other words, you had to put 15% down on your rental product. I don't think you're going to see that for a while. So the bank standard is usually, it has been 30% down, so 70 30, so 70 LTV.
Yeah.
Wall Street is always going to want to beat a bank. So Wall Street is probably going to be 5 to 10 more than that. So the most we're probably going to see a max refi is probably going to be 80% or purchase. So you're putting 20% down on your purchase. Most people, however, are probably going to fit within 25%. I think the 20% down people are going to be 700 FICO, 680 FICO and higher. Low debt to income and whatnot. I think everyone else with lower FICOs is probably going to be in the 75. So they're probably going to have to put 25% down to buy any given property.
Okay. Panamera Boss asks, are you guys lending to first-time investors with 700 FICO?
No, good stuff on the FICO though. Congratulations. We're not lending to first-time investors. We're joint venturing with them.
Right. Please talk about that program, Mary, because I think that's a great program you guys have.
Yeah, hell yeah. So look, the joint venture idea is sort of its own pipeline for Arkad. It's becoming its own animal. My partner Dan is running it. Dan, just to put things in perspective, Dan runs the day-to-day of the construction side of Arkad. And that's, we have 27 active projects right now, 3 more closing in the next couple of months. So it's a heavy pipeline. He's in charge of 2 project managers and on average 10 to 12 to 13 workers, doing all kinds of things. And then every sub that we hire for everything else that we do. So Dan runs all that, and it's incredible how much happens any given day. Now for Arkad Capital, Dan's also running the pipeline of joint ventures, and the idea is exactly that. You're gonna have a true professional, a true hands-on experienced dude, basically going through this with you, from budget review to
scope of work, right? Everything.
Absolutely everything. We are bringing some of our resources in this if they're needed. We have plenty of contacts for pretty much every trade, and we are doing a little bit of hand holding. I mean, truly, we're looking for exactly those guys, the 700 FICOs that haven't done this, mostly because of that, because there is a sense of responsibility that somebody with a 700 FICO usually has. And so again, we're really we're looking for those. We're not looking for stars. We're looking for those level-headed people. Now the way it works is we're coming up with depending on the structure, half or all the capital that you need, including the loan, including your closing costs, including the escrowed payments. we're coming up with absolutely everything for somewhere between 30 to 50% of the net profits of the transaction.
Okay.
So not every deal is going to fit, but there are good deals out there that are going to fit this model.
Right.
The joint venture partner does not take any liability per se, but we do include them in the deal so they can
Right.
grow that experience, so they
Absolutely.
can be part of it. So they are owners. They're not,
Right.
they're principals. They own part of the LLC. They have a set of responsibilities
Right.
they got to accomplish. I mean, it's and ultimately we're breaking bread together. We're splitting
Right.
the pot.
No, I think it's phenomenal because you can learn alongside. You're in the deal. You're learning with experienced people, and I think that's just amazing that you guys do that.
Yeah. I mean, it's really new for us, man. We really, to be honest with you, we've sort of stayed away from that end of the business for many years. Even outside of Arkad Capital, just as Arkad Group, we get a lot of people who are just like, hey, I don't want to do this deal. I'll give it to you guys. You guys pay me, and we'll. So we've sort of taken a backseat to all that. But right now we're at a point where we have a lot more reach than we ever did.
Right.
And we financially we can make these smaller investments along the way, so to speak. And look, more than anything, I think this is a great way to meet some really good players, to meet some really good, talented people that chose the right path, right?
Yeah. Absolutely.
That's my kid. He's
okay.
Cool. But yeah, so it opens up the door for a lot of that, a lot of conversations with people that have a really good notion of what they can do and how responsible they are. But more than anything, those people that have done things right, they just haven't had that one final push of confidence, right? Like they haven't had that one trigger that made them say, okay, look, because of this, I feel safe enough to go through this. And then and once they cross that bridge, eventually they don't need us. But what's left behind is hopefully that come up, that story, that remembrance of them meeting this group in New Jersey who gave them their first loan, and now they own 50 apartment buildings.
You developed a relationship, and you can always go back and help them. Absolutely.
Yeah, man. Look, at the end of the day, I'm in the real estate business myself, and I don't look at this thing as just houses, buildings, ground up, or loans. I look at this as a community. I look at this as, look, I've been in this for 15 years already. I've seen a lot of faces come in. I've seen a lot of faces disappear. And I've been through a crash. Heck, I've been through two now. And I understand longevity. I understand sustainability. I understand that in order for you to remain in this business long term, you not only you have to remain relevant, but you have to venture out. You have to try multiple things. Look, the reason why we have this array of strategies out there and investments is not just because we like to gamble with different things. It's because once we reached a certain level, we felt that we were confident and prepared enough to attempt the next one. Because if we have two strategies, there were no one show pony. If things change, we don't have to. We don't crumble. We simply readjust, and that has created longevity. And being able to switch strategies through markets has kept us in business, man. So the way I look at lending, the way I look at house flipping, the way I look at management, and every single basically pipeline that Arkad has is exactly as that, is as a pipeline. Is if I structure this properly and I manage it well along the way, it's going to pay out, and it's going to continue paying out over and over and over. So but if the pipeline isn't working, due to the fact that you have 7 of them going on, yes, you can turn one off while you create another one. If you sort of just bounce around through all these different strategies, and if you become very consistent on each and every one of them, your results are better and better and better on each and every one of them. So it works very well, man. And we've been able to get to that point
Right. It's
right now.
awesome.
So I guess my point is, I feel, and look, I'm only 37 years old. I feel that I'm healthy as hell. I have no allergies. I have no diseases. I'm
Thank
good.
God.
And look,
Yeah.
I'm in this for the long run, right?
Right.
Like I own a bunch of commercial buildings with 25-year mortgages on them. That for the most part I acquired within the last 5 to 7 years. So I want to know what it's like when those buildings are paid off. I want to be there to
Yeah.
hand them down to my kids. Like I want all that.
Yeah.
So I guess my point is a part of the way I look at a borrower, at a client. It's not so much just on what we can potentially do now, not just the one deal, the 3 deals, maybe the 10 deals, but if we get this right and we actually build a relationship here, 10 years from now we can both be talking about the apartment building that you own there and the one that I own here,
Right.
and how we at some point put our money together, plus that other guy and that other guy and this
Right.
other guy, and we own our own REIT. I mean, I don't know, look,
Right.
but
No,
point is that I want to have that possibility.
sure.
And by being a lender, by being just a real estate player here in New Jersey, and having a good reputation, man, doing what I do and being the best I can be at anything that I put my mind to,
Right.
Has really put me in a position where I'm looking at this thing as every relationship, every client as a long term. Let's make some money now through loans and flips, but let's keep this open to see what else comes about.
Right. That's
And
great.
look, I'd love to turn Arkad Capital into a REIT at one point, a real estate investment trust. For those who don't are not familiar with the term, in essence, an investor-owned massive conglomerate of all kinds of buildings and properties and so on. And point is, so in order for me to get to those levels, heck, I'd love to own a bank one day. Now that I'm in the banking industry, owning a bank has become a goal. And all these things become more relevant because once I get to that point, I want to be, or I'm getting close to that point. I want to be able to have a Rolodex of a bunch of real estate related people that have successfully through the years borrowed from me, and good business has been done, and now all of a sudden we can have a higher level conversation.
Yeah. And you can connect people. You can connect people and help them out along the way. Absolutely.
Correct.
Yeah.
So that's kind of the mantra behind all this, man. It's long-term thinking. It's Arkad Capital it's more than just a hard money lender.
No, absolutely. I get that. Yeah.
Yeah.
You guys are bigger than that. Yeah. You guys are phenomenal at what you do. You're great to work with. So I feel that vibe right away. I felt that vibe right away from you guys. We're coming up on the hour, so I don't want us to get cut off. Let me just, Kelly Christina asks, investing in flood zone?
Yeah, depending on how bad of a flood zone. I own properties in flood zones. It really depends on the height, the flood, what do they call it, the flood plate. You really want to, whenever you're buying one or you're trying to invest in an area, the first call you should really be making is your insurance company. If the plane is too high and the flood insurance parameters dictate for that policy to be extremely expensive, your numbers are not going to work. Your numbers are not going to work as a rental. Your numbers are not going to work on the resale because the person that can afford $250,000 wasn't accounting for a $5,000 a year insurance bill. So now that 250 person becomes a 200,000 person, or I'm sorry, your 250 house, because of that insurance, now becomes a $200,000 house based on affordability.
Right.
So my recommendation, if you're just starting out, stay away from flood zones. If you are going to dabble into flood zones, call your insurance person first and get a good sense of your location.
Nettie's asked, is the joint venture on buildings or houses? I say
Everything.
It's on everything.
It's on everything.
Okay.
We're looking for opportunities. We're looking for people. We're looking for talent. We're looking for opportunity. House. The only thing I don't, unless the experience is really there, the only thing I don't want to joint venture on at the moment is ground up new construction.